Hello. Mic test. Mic test. Welcome, guys, to the 84th edition of the Trading Opportunities webinar. And let me check the audio at my end before we actually begin with the content. All right, so it looks like the audio is working fine at my end. So let's officially begin the webinar with the first of all covering the disclaimer here on screen, suggesting all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or any other purpose, you yourselves will be liable for your profit loss or loss of profit. So that's our legality is covered. Now let's have a very quick introduction, guys. So good morning, good evening, good afternoon, depending upon the time zones you are in, and welcome to the 84th edition of the Trading Opportunities webinar. Guys, my name is Nirav. I'm the admin and owner of the website 50 Years Market Analysis YouTube channel and website, right? And before we move, I think, yes, it looks like chat is also live. Yes. So as I was saying, we have been doing these webinars for quite some time on a weekly basis. We conduct, in case you are watching this later on as a recording, we conduct these webinars every Friday at 2 p.m. GMT or 7:30 p.m. IST. So in case you want to join in less time, just convert this to your time zone, and that's about that. Apart from that, in the last 82 webinars, we have captured about, say, 142 plus trades. I'm talking about the big or substantial movements. These trades were all discussed live in live market conditions, obviously, because we go live on Fridays at 2 p.m. GMT, as I mentioned earlier. What happened in the 83rd webinar, we will discuss today in the 84th, obviously. And do keep note that this webinar is broadcasted live on my LinkedIn as well as YouTube. And later on will be available as a recording on my website as well. So you can just go head over to the website 50eyes.com, and later on you will find the link with detailed timestamps at the bottom, just like you have all these. Right. Next thing, I'm also the author of the book Think with the Markets. You can get a copy of it on Amazon. It's available on their Kindle platform, so you can electronically have it in seconds. And before we proceed, I always like to show off my multi-year track record, which is above all industry standards. And I've been keeping a consecutive record for 6+ years. You can see all the markets discussed here. What was the analysis? Let me just quickly show them. First of all, so the accuracy in 2016 was 83.34, 2017 87.5, 2018 84.6, 84.88, and 2020 88.52. 2021 82.82. So what is this really is that name of the instrument, the date when the discussion was done, the analysis, and the video link, and what really happened. So at that point in time, I was conducting monthly webinars and putting up videos as well. So this is a compilation of all that. After 2021, we started doing weekly. So we have been keeping a track record of the number of trades that worked out, because it's a lot of analysis to keep a track of. Anyways, so with that out of the way, now let's head over to the actual content of the webinar, which will be the Euro USD followed by crude oil analysis, gold, S&P, and then Nifty followed by Bitcoin in the end. Lastly, I do keep a coverage of all these things in my private Slack group, which I have made accessible to the public at a generous fees. If you are interested in getting analysis live, as well as my live trades as well, which are posted live market, obviously, because I'm trading on live accounts, then you can request for details for this Slack group via using the contact us page 50s.com/contact us. That was about it for the introduction, guys. Now let's head over to the charts, and looks like we do have some comments in already. Ramjendra Dikshit. Hi, Ramjendra. And Philippe is back here. Good morning, Philippe. Good morning, Madhavji. And good morning to you, Luis. Sorry, good evening, Madhavji. So yeah, guys, let's now begin our discussion. First of all, with Euro here on screen. So with Euro, our discussion last time was that, I'll just remove the counts for once. Last time our discussion was that this was the wave Y. And let me also check the date. The date was 6th, right? So our last discussion was on 6th of October, somewhere here. So anyways, the point was that in the discussion, I said very clearly that either this Y is followed by an X, which is already complete here, followed by a Z, which is already complete. And the second possibility was that this Z is not yet complete here, but this is all a continuation of an X followed by a Z, still to go lower than this low of 1.04468. Basically, this low should be taken out. So this was our analysis last time. So far what I can see, this whole price action, which is in the box right now, this looks sideways and choppy. So which is the characteristic trait of what we call corrective price action. So because I believe this to be corrective, what I'm going to consider is the fact that this market is most likely still following through with the wave X, right? If it is still following through with the next wave X, then obviously our conclusion becomes that the primary analysis is that this market will go lower and take out the last low of what is this 1.04491 something, right? So basically this low should be taken out is my primary analysis because of this price action right now, right? Now the thing with wave axis is they are, there is no stoppage to how much complex they can become. It is possible it has ended here. I actually have the count on screen, so I'll just show. So my primary count is that this is going up for an A wave. That's a small a followed by a small wave B. And this is a diagonal in the end for the wave C. So this is basically a flat correction is my primary count here. Once the flat correction is complete, the market should go lower and as I said, take out the last low, which is currently around 1.044. Right. So that's the main theme. Secondary thing which I wanted to point out is that the possibility, as I said, wave X can become more and more complex. So the way to visualize this generally is to just draw the box, which we already have. So in this case, it has gone a little bit lower. So we'll just cover that as well. Now, if you observe that this is the first possibility that X is complete here, the second possibility is that it is still continuing within this box range, right? So basically that means, long story short, is that the price action, as long as within the box range, can still be continuing as a wave X. It could complete here, it could complete here as a triangle maybe. No, actually it can't be a triangle at this point, or it can just become more complex. But I personally will like to enter shorts. Probably I'll do it after the webinar or in the next session, right? The idea will be, if I enter shorts right away, will be that I'll enter only partial positions, let's say 2/3 of the position which I want to enter, or 1/3. And if the market gives a pullback, then I'll enter the remaining position, right? For it to then go lower. So that's my take on Euro USD. That's our main hypothesis at this point in time. The secondary possibility, I think, is not much worth discussing. The secondary possibility is a forced kind of count, which is suggesting that the Z actually is here, and this is a what do you call wave one up, two down kind of progression, and that would basically mean that the market will go up. But as I said, we don't really have an evidence for it, so it is possible. But what we can do is, I personally will not like to go long right away. I want to see the market give me some sort of confirmation. So above the price action around 1.058, I will look to consider longs, and obviously the real entry will be if the market really breaks out above the high, let's say around 1.062. So keep in mind, even though the bearish possibility looks more likely, as I said, let me just redo the counts. The bearish possibility does look more likely, right? But there is no confirmation we have. Even in the case that the Z was complete here, it could just be a wave one followed by a wave two, right? And wave two can go to as low as 99.9% of wave one. So it can basically go very near to this last low, like somewhere here it can go and then reverse. So as I said, there is no confirmation. That's why I'm kind of waiting and watching, and I have not yet entered shorts. Right? Given that both the possibilities still exist, if I do enter shorts, I will look to consider putting the stop losses near the swing, which will be coming around at 1.05584. So basically, all I'm saying is that in case of short entry, I will look to keep a smaller stop loss somewhere here. And long, as I said, I'm not really interested in unless we see a confirmation strong move or something. That's about it for Euro. If you guys have any question for the audience, which is currently live in the chat, they can just type it in if they have a question. Otherwise, we'll just move on to our next chart. Well, thank you for the confirmation, Madhavji. In that case, let's now get ahead with our webinar. Stream is shown as private. Why is the stream private? I don't know. But anyways, in that case, let's now head over to our next analysis, which will be the analysis for crude oil. This was also the main title of the webinar. So let's see what's really happening here on CL. The main theme, I should say, with CL is that we were expecting when we discussed last time as well. There were two main possibilities. I'm just going to go and discuss the one which I think is of relevance in the short term. Long term wise, it will become a lengthy discussion. So I'll just keep it for our Slack audience. I'll just post the charts, which I believe they are already there. I'll just update them. As far as the count is concerned in crude oil, the main theme here is that it looks like from this point of reference, which is coming around at 95.49, we seem to have completed a WXY correction to the downside or double zigzag correction to the downside. Those of you not really following the webinars regularly should note that I was able to clearly point out that this yellow trend line, once broken, we will look for clear short entries. And we were able to actually capture a big part of this black down. This was a discussion from the last 4 or 5 webinars. Anyways, coming back to the current webinar, which is or the current price action, which is suggesting that this market is probably heading up for at least 3 waves in the upward direction. Again, as I said, there is a second possibility which is suggesting that the whole correction is complete and this market is going up. I'm not going to discuss that in detail because in the longer picture, it does not make much of a difference. It makes a difference, but not in the shorter term, which is what we are here to discuss. So in the shorter term, it is basically suggesting that this high should be taken out at once by this market, right? So what I'm really suggesting is a zigzag correction, which should look roughly like this. And on the real chart, it is looking already like partial N is complete. What we are waiting for is the last leg of the N. Now, that does not always have to go that much up from the wave A high. This is called the A, by the way. This is the B, this is the C. The wave C can just go a few ticks higher than the wave A, and that will in itself complete the complete pattern. Now, in this particular case, this market has gone and sort of touched the last high, but it has not broken the last high. So that is what I believe will happen. Eventually, it will at least take out the high at once, maybe by going sideways and then up. And there's a second possibility that this market is continuing sideways already as a complex wave B, not just complex, maybe a simpler pattern, maybe a flat. But long story short, it can just go sideways first before heading up for the wave C. Right? Those two possibilities exist. Long story short is that I'll look for long trades once I have some sort of confirmation. There are two strategies basically what I'm looking to play here. First is that if the market breaks above the last high, which is let's say somewhere around 87.41, then I can enter some scalps, like very quick big positions for a small move up. That is obviously a strategy here, which is definitely valid. Second thing which I'm looking for is that if the market continues sideways within this box range, then I can keep adding as the market pulls back for the next leg up, right? So long story short, crude, we do not have a idea for a very big swing up. It may go up a lot, but what we do have an idea is that it will give up a minor leg, right? There is one more thing we can do is we can measure the 1:1 mark. So this is the wave A and this is the 1:1 mark. Let's make it blue. So in case this market is going for the 1:1 equality, it does not always have to, then we will look for price around 88.77 as our target, right? But as I said, it just has to go higher than the last high, which is 87.38. Even a small movement, a few ticks above it will complete the pattern and then it can reverse. But these targets are important to keep in mind. In case the market continues, we can just book partial profits and trail the remaining and then book the complete profits if it goes around 88.77. That's about it for crude oil. Not much to discuss here. Of course, if you guys have questions, those who are in the live chat can type them in. Otherwise, we'll move over to our next chart of gold. And as always, guys, we were tracking this whole leg down and this whole sideways movement with all the important accounts and possibilities and trading opportunities live in the Slack group, right? This week I was busy with some stuff, so no trades on crude oil, but I generally take at least 3, 4 trades and at the minimum 1 to 0 trades, obviously. And they are all posted live in the Slack. Those who want to become a part of the Slack group, you can already see the link in the description. You can just use that link and fill up the contact us form. This is the contact us form, by the way, 50s.com/contact us. Just type in the subject matter as inquiry for Slack group access. Right. So that's about it for our discussion on CL. Let's now head over to gold. Thank you, Madhavji, for the confirmation. And gold, it looks like, has rallied a lot. My actual strategy itself was to enter longs if I could find a pullback. But it looks like I just was too cautious. And this market is not interested in giving any clear pullback. By the way, I do seem to have a question here. Can we mark the waves in big time frame and scalp in smaller? Yes, yeah, of course you can mark the waves in big time frames, but to scalp in smaller time frame, you also need to have a short term view, that is a count on the smaller time frame. Generally speaking, at least 15 minutes count you should have, right? Which is, by the way, what we are tracking right now here. By the way, scalping is done when you have a lot of clarity and a lot of confidence in the count, right? Hopefully that answers your question. Now let's head back to our discussion on gold. So yes, as I was saying, gold, I had a view to enter longs. I actually posted that in the Slack group as well. Let me see. There it is. Strongly bullish as went up without touching the low. We had a support level which it did not touch. I will look for longs on pullback. So I was being a little bit cautious here and wanted to go longs on pullbacks, but it never went for a pullback. By the way, my account was somewhere here around 1890 something level. I was looking for long opportunities and waiting for some pullback. So that opportunity is now gone. And as far as the count is concerned, actually, I shall just refresh the count. Yeah, as far as the count is concerned, it does look like we are currently in the wave 3 already. Possibly even complete the circle wave 3, I mean. And the circle wave 4 may be here. Okay. So long story short, it looks like it may propagate sideways a little bit, not much for the wave 4 circle, because it does seem to be very sharp, and generally wave 4s are not sharp. That is not the characteristic trait of a wave 4. So I'll just measure one more thing here, by the way. Actually, if I was not doing this, I would have taken some scalps here. But it's too late for me to enter a scalp. So it looks like either the wave 4 is going to continue or it's already complete. Long story short, in either case, I will look for something like this leg up, or if it's continuing, then sideways movement within this box range and then a leg up. So as I was saying, if the market remains within this range, I will enter partial entries, and if it propagates within this range, that is this box, then I'll look to add more and add more near the lower levels or near the pullbacks for it to then break out of it. Right. So long story short, gold, I'm looking for short-term long opportunities. Scalps, definitely it's opportunity right now in my understanding, but overall swing wise also we can build up. But this will be an inverted trade. That is, the risk will be bigger than the reward in this case. And that's generally the case with scalps. Okay, not much to add here on gold. Right. And as far as the legs to the upside are concerned, it does look like it will have, after this wave 3 is complete, one more leg up for the 5. Of course, if you guys have any questions on this chart, the live audience can type in the comment section. Otherwise, we'll move over to the next chart of S&P's 500. S&P 500 looks like did not move as I was expecting it to in my last analysis. Sorry, the last Slack post, not the analysis from webinar. So it looks like we have what seems like a wave B continuation or C continuation. So let me just take a look at it in some more detail. My last count was, one second. Yes, so I was thinking that this is the completion of the wave 1. Right, and I was thinking that this is the A down, B up, and this was possibly continuing as a 3, 4, and 5. Generally, 4 wave 4 will do some weird stuff. So this is suggested that it might be that, but overall now we cannot consider it like a wave 4. It looks like wave 2 may have completed here because we seem to have a 3 down for an A, 3 up for a B, and 5 down for a C already. So it may be complete here, but I'm not really interested because generally speaking, wave 2, if you look at it here, it's about very small retracement. Generally, wave 2 will go to even 61.8%, which will be somewhere here. I think I may have marked it already. There it is. So it's already marked. This is the zone 50-60% zone. So generally, wave 2, we expect it to go there. It does not always have to. If the market is super bullish, then it will not. But in most cases, I find that it does go and sort of fulfill that guideline. In this case, it's not doing that. So I'm not going to go long right away. I will wait for some more signs of evidence for bullishness. One of them being this market taking out the high of 43.80. That's alert for me. And I think above 43.90, I will definitely consider this market for a up move. Overall, if you are very conservative and do not want to bother yourselves with such risk, then the confirmation, as you already know, will be at the breakout of the high, which will be around 43.98. Let's say 4400. So at that point, you have a confirmation and a breakout trade to the upside. So yes, in gold, I'll say that wait and watch, long trade, long above 4400, right? Shorts, shorts are gonna be a bit tricky, and too many targets for shorts. At least 3 targets. So shorts, if you can yourself decipher this count in shorter time frame, because I will update it in the Slack group. But I know not everybody is a private group member, so I'll leave the shorts as is. I will consider them, but there is no clear strategy right now because this structure looks like it will become complex. This part after wave 8 looks like it will turn into a complex structure. So I will not comment on it, but longs were clear. Longs are just a breakout trade, very simple. Nothing much to add. If you guys have any questions on S&P, you can just type them in the comment section. I'm talking about the live audience, which is in the live webinar, not the later viewers. I don't answer queries from comments who are not live. And what's that? Now let's head over to Nifty if there is no doubt on this. After that, we will head over to Bitcoin. And yes, lastly, guys, if you want to receive these updates live, then you can send your inquiries to the 50s.com/contact us page. Just type in the subject matter details for Slack private group. And before we move to the next chart, make sure you have hit the like button if you are currently watching on YouTube or other platform. And eventually, when the webinar is complete, I would request that you guys share the content with those people who are into trading and who would like this kind of content or will be beneficial for them, right? Because sharing is important. We still need to get more views to consistently keep the content incoming. And it does take a lot of time and effort to come up with these analysis in the public forum. This is kind of the service which I should really be doing completely privately. So anywho, let's now head over to the chart of Nifty. Thank you, Madhavji, for the confirmation here. So Nifty has, I'll just squeeze the chart a little bit and show what's really going on here. Nifty has been going on with a lot of gaps, as you can see over here. But before we discuss the current scenario, I'll just point out something we discussed in the last webinar, which was conducted on 6th. On 6th, the price action was this. This is the 6th October price action. We are on the 15-minute chart. So if you guys were here, you must recall that I pointed out the possibility of upside. And very specifically, I pointed out this abandoned candle. On the daily candlestick chart, you will find that this price action is just one candle, something like this, right? And there is a gap down move followed by a gap up move. So that makes or gives it the name abandoned, right? So this generally happening near the end of a move or expected end of a move is a sign of reversal. We pointed that out very clearly in the last webinar. And we discussed it over here that it can or it should give at least one more leg up. Basically, what I'm talking about is that I discussed that if the market is going up as an A, then it will go down as a B and give one more leg up, this leg up for a C. That is the minimum the market will move. So we had at that point already completed this leg. And after that, the correction happened and then the next leg happened. So those of you who were seriously listening to the analysis, they should have been able to understand and look out for this move in the live market conditions, as well as some part of this, although I doubt it because it was mostly gap down. But this definitely they would have been able to capture. So as far as my understanding is concerned, we were able to capture this move or analyze this market properly and decipher the correct pattern. We were actually able to capture or analyze this market to first go down and then go up. So both these legs, this leg and this leg, we were able to decipher on 6th itself, which was the last or the third webinar. Obviously, you can just go back to the YouTube channel and check my analysis there in case you are unfamiliar. You can head over to 50 Years Market Analysis YouTube channel, click on the live button, go to 83rd webinar, and there will be what you call timestamps within the timeline. So you just go to Nifty, click here, and then you will see what we are discussing here and verify what we are discussing here. There it is. There I am pointing out to the abandoned pattern and all that. So you can just check it for yourself later on. I'll just leave it to that. And heading back to the analysis of the current price action, it is not really very simple analysis. And as I said, the minimum pattern which was supposed to be going to the upside is kind of already complete. And I'm seeing sort of count suggesting bullishness, but price action suggesting bearishness. So we are getting some unclear signals here. Let me see if I can clarify it in little simpler terms here. So from this point of reference, which is the price action around 20223, we are supposing that this market is an A down, B up, and C down. So a W complete here, or maybe the whole leg was a zigzag, which is finished here. If the zigzag is finished here, then this market can just head higher, higher, higher. That's one possibility. But if it's continuing as a complex structure, then it can just be a W. This could be heading up for an X, and this could be the now a Y. So since both possibilities exist, that's why in the last webinar, when I said that this can be one of the major plays, this was sort of also the confirmed clear play which we had remaining. Now the problem is that if the wave X is complete here, then it can just go lower. On the other hand, if this was just a zigzag, which is complete here, then this could be a series of ones and twos, or a nested 1-2 pattern, as I like to call it. And this could just go up with a huge force, right? So far, I'm not getting signs of bullishness on this counter. It does look count-wise that it can go up, but not clear bullish signs on this counter so far. So I'm not going to enter any longs unless I see a break near the high, or let's just say break of the last high, which is currently around 19844 something. Only then I'll be considering the upside trades. 1 second. And as far as downside possibilities are concerned, if it really is a W and if it really is an X, then yes, I'll be based on that analysis looking for shorting this market below 19670. At least swing, not swing. If not swing, then I'll just, if I can catch it in intraday, I'll just go for a scalp trade and try to get 19670 to 19620. Almost 50 points, not bad for Nifty. So as I said, the possibility of huge up move, huge down move, both are there. But what really is clear on this shorter time frame is only this much. I can say below 19670, I'm looking for at least around 50-60 points lower movement. Right. So what later on happens, I'll update in the private Slack in the coming week. But this is the outlook I have on Nifty for now. Of course, those who are live in the chat and have any doubts, questions on this analysis can just let me know by typing in the comment section, or we'll move over to our last chart of Bitcoin. And yes, guys, lastly and more importantly, if you are liking this analysis, definitely hit the like button and share the content with your friends and colleagues who are finding this content helpful, useful, so that we can reach a bigger audience. Let's head over to our last chart here, BTC. Unclear, unconclusive price action. Let me just show you what I'm really thinking here. So as I said, this is kind of the most unclear chart which I'm seeing among so many different charts. Considering it from this point of reference, this is the price of 31,051. If we take this leg as an A, this could just be a continuation for a B, which will then be followed by a C. Second is that the B is already complete, and this is already heading for so C down, right? So long story short, it is supposed to go and go lower than 24,785. Basically, this low is supposed to be broken if this analysis is correct, right? The only thing it is that we are looking at it from a swing perspective, and the stop loss in this case will be much higher because wave Bs are known to be complex, and they can just go higher as well and all that. That is a wave B. If it's still continuing, it can even go above this level and then fall. So for that reason alone, I'm not really taking any trades on it. But in reality, the strategy would be on this counter to add some shorts. If I did here, then we will have to average if it goes up for wave B. Worst case scenario is that it does go up but does not break the low because it becomes a flat. So what I'm really hoping for is, or the clearest possibility I shall explain, is that if this is an A, and let's just say that this is the B wherever it is, even if it's here or there, no, doesn't really matter. Once it breaks lower than this target of 24826, keep in mind different data feeds may have a different price level. This is from this data provider. So once it has gone below this level 24826, then I'll start looking for longs, because then a reversal in the upward direction will confirm that at least the corrective pattern is complete, and let's just say a move above 28435 will then suggest that upside can be taken, or long trades can be taken. But again, as I said, unless it breaks the 24826 level, I'm not really interested in longs. And as far as the shorts are considered, as I told you, the wave B can become a lot more complex, and it does look like it is becoming complex. So I'm not really interested in carrying a swing position and just adding and adding to it. If you just observe, it's a 4 hour chart and it has been sideways since April, mid April. So, lot of sideways drama on this counter. So, avoid, I would say. So, guys, with that, and thank you, Mataji, for the confirmation. So, with that, I would say that we have completed discussion of all the charts which we usually discuss here. And what I would say is that if you are liking the content, hit the like button and subscribe to the content. And of course, most importantly, do not forget to share it with your friends and colleagues who are finding this useful. Right? We meet every Friday at 2 p.m. GMT. And as I already told you earlier, if you want to become a member of the private Slack group and receive these updates and my trades live, then just contact me using the contact us page and typing the subject matter as inquiry for Slack private group. So it has been nice seeing you guys here, sticking till the end. And with that, let's just bring an end to this webinar. And it looks like I have a question. Luis, it looks like you have joined in very late. I just discussed BTC. Perhaps just go 5 minutes back and check it. And good night to you as well, Madhavji. So, yes, guys, bye and take care. You're welcome as well, Philip. Bye, guys.